You got that U.S. GDP growth for the second quarter, 1.2%, well below 2.6%. That's what Wall Street was looking for. The big miss doesn't tell the whole story, though. You've got two things. Consumers, they're actually spending. Businesses are not. Personal consumption up 4.2%. That's the highest since the fourth quarter of 2014. On the other hand, businesses on investments were down 2.2%. Structures like factories down almost 8%. Equipment down 4%. The biggest winners from this consumer spending, cloud. I mean, that's where more and more of these transactions are taking place, and we've seen it on full display this earnings season. Think about it. Big cloud winners on earnings already include Amazon, Microsoft, IBM. Even Google Alphabet last night said that cloud will be bigger than search in 2020. Now, on the other hand, the two big losers today underscore the conundrum of cheap oil and how it actually can hurt our economy. In the last 3 months, for instance, ExxonMobil spent $1.5 billion less on capital projects. We're talking about a 49% decline from a year ago, 57% from just 2 years ago. Same story with Chevron. Company spent almost $1 billion less than it did last year. Now, how do you translate that into the economy? It's a loss of a lot of great jobs, construction jobs, roughneck jobs. Big businesses simply are not going to make major investments with the mountain of rules, fees, regulation, fines. I said it already. Who wants to kick up dust while you build a factory and be fined for it? Consumers probably will keep this economy from tipping into a recession, but that's about it. In the meantime, the rally, it's intact. It probably will stay intact. In fact, the next leg higher could happen as long as we hold on key support points. Okay, I've got those for you, but you got to go to my website, wstreet.com, for more details. In the meantime, let's bring in one of the best out there market expert, John Layfield. John, you've heard my shtick. I tweeted a moment ago. You'll let me know if I'm right or wrong.
No, I think you're right, Charles. Look, talk about the trends in GDP. Look, 3.2% is the long-term average of GDP. We just passed the first 10-year period since we measured it that we didn't have 1 year over 3%. We're going to have the 11th year, and the trend is actually going down. But when you talk about oil companies, and I do own ExxonMobil and Chevron, they both have a 3.5% to 4% yield, respectively. That was the one place that we were getting a lot of good jobs. Here's an interesting stat. 2007, we had 121 million full-time jobs in the United States. Last year, we had 121 million full-time jobs in the United States. Full 9 years later. That's because we just have not seen a growth, and the only growth that we were seeing was in the oil companies. Now, that's despite having a 21 million increase in population. So, yes, it does hurt the economy because the jobs that were being created in the oil sector were very good jobs.
But the conundrum, of course, is you've got to have demand, and if people don't have more jobs and higher pay, there's no demand. So we go down, it's the exact opposite of the so-called virtuous cycle. Of course, the election, the economy ultimately is one of the main factors in it. What do you see? I mean, I still want to hear less about these regulations, John, because I think before we even start talking trade, lower taxes and get rid of these regulations. Stop fighting companies for kicking up particles of dust.
Yeah, you know what's amazing, Charles, was in 1996, the best thing that President Clinton did was the Small Business Fairness Act. It took away the regulation from small businesses, and that had a bigger increase than the internet phase that came through during that time. But since then, we've not had that happen. So you just had regulations on top of regulations. It costs the economy somewhere around $1.4 trillion a year. That is one of the things that is hampering small business, which creates most of your jobs.
Folks, there's a reason John is doing this from Bermuda, and I'm stuck here in the studio. Thank you very much, buddy. Appreciate it. Have a great weekend.
You too, Charles.